well, you know that sound. It is today's closing bell at the New York Stock Exchange, a day that we were looking to see what was going to happen on a very important day, really.
That's right. And we're ending worse than where we began, in the red. The Dow pulling back at least almost 350 points. The S&P and the Nasdaq also closed the day in the red. The S&P down more than 1%, and the Nasdaq down about 2%.
Bharat Ramamurti joins us now. He is the Deputy Director of the National Economic Council, just the person that we want to speak to today. So tell us first off how the White House is responding to Fitch's credit rating downgrade. And do you agree fundamentally with the assessment that the current political vitriol is hurting the ability of our government to work for the people?
Well, first, I would say that we do disagree with the downgrade announcement from Fitch. I think if you look at their own metrics by which they are making this kind of decision, it just doesn't make much sense. If you look at, for example, governance was a concern that they raised that declined during the previous administration and was improving during the current administration under President Biden. It's confusing, therefore, that they would use that as a reason for a downgrade at this time. Similarly, over the past several months, we've gotten day after day of very positive economic data. You have multiple banks, you have Bank of America, you have Morgan Stanley announcing that any recession concerns that they had in the short term, they're reversing that and no longer feel like that's a real risk. So you have a host of good economic news. So you put all of that together and the timing of this and the justification for it is very confusing. And I think a host of experts on the outside agree with that assessment. I would say, however, that Republican extremism, which is underlying this announcement, still remains a threat. You look at what happened earlier this year, where Republicans took the debt ceiling hostage, threatened a first ever default on American debt. The president was able to diffuse that situation and reach a good outcome. But this kind of hostage taking by Republicans over and over again is a threat to the economy, and it's something that is going to cost the American people in the long term.
You know, Bharat, you may disagree with the assessment, but it's certainly not a good look for the country, right? This type of reaction on Wall Street, it's about emotion almost more than it is about the data. And as you've just described Republicans as hostage-taking and extremists, there are real instability concerns when it comes to how the United States governs itself, especially there in Washington. So how is the administration aiming to alleviate that and work with the Republicans on the other side of the aisle to get the country of the business of the country done?
I think the president has shown quite clearly that he can do that. The Republicans started the year by saying that they were going to threaten the first ever default on our debt unless they got through their highly partisan agenda, which included massive cuts to programs that middle-class families relied upon. The president pulled everybody together. He ultimately passed a bill that raised the debt ceiling, and it avoided those kinds of severe cuts that the Republicans were pushing for. So I think that under this president, at least, people should feel confident that there is leadership that is able to pull together people from both sides of the aisle and avoid the kinds of outcomes that the most extremist Republicans are pushing for. Second of all, it is important, of course, to address the long-term fiscal trajectory of this country. That's why the president's budget actually cuts the deficit by $3 trillion over the next 10 years through some targeted spending reductions, as well as some new taxes on the very, very wealthy and on the biggest corporations. That combination of policy changes could help move our country in a much better fiscal direction. And the president has made progress on that over the last 2 years, but is eager to work with Congress now to move further in that direction.
It must be frustrating because hearing the work that as you're touting the accomplishments of your administration, there's still this major disconnect between the economic data and how Americans feel about the economy. In our most recent CBS News polling, 35% of Americans say that they are falling behind compared to only 13% that say they're getting ahead. In fact, according to our month-over-month polling, more Americans say that the economy is getting worse this month compared to just last month. What do you say to Americans who are struggling?
Look, I think if you look at the data overall, it suggests that the economy is improving. Obviously, at a headline level, inflation has come down significantly from last year. It's come down by about 2/3. At the same time, we've had extremely strong economic growth, and we're projected to have extremely strong economic growth going forward. Wages have outpaced inflation for the average household over the last several months as well. All of that said, we're not in a position to tell Americans how they should be feeling. I think that it's going to take a little while for the improvements that we've seen in the economy over the last few months to translate into people feeling more secure in their financial position. It's not like we can flip a switch and as soon as the indicators start moving in a good direction, everyone's mood on the economy starts to improve. I think it takes a little bit of time. It takes a little bit of us explaining what it is that the president is trying to accomplish on the economy. And I remain confident that if we continue to get strong economic data, that's going to show up in the polling numbers and American satisfaction as well.
And we should highlight to viewers that this is just one credit agency. Right. But, let our viewers know who are feeling the pinch now. How will this administration work to restore the AAA rating? And, of course, increased borrowing costs will make the president's budget more difficult to achieve in some respects.
Well, I should say, first of all, that the reaction on Wall Street and in the markets to this announcement has been quite muted. I think, again, experts from across the political spectrum have acknowledged that in the last several hours. So I think the actual on-the-ground impact of this credit rating change is going to be relatively small. I think at the same time, it is important that we work together to address the debt, the deficit, and the fiscal trajectory of this country, while at the same time ensuring that really important middle-class programs are preserved and expanded as appropriate. The president's budget accomplishes that. Like I said, it cuts the deficit by $3 trillion over the next 10 years, and it does that while still preserving really important programs, everything from Pell Grants to the Head Start programs to funding for housing and for schools and so on. That's the balance that we need to strike. As I said, over the last 2 years, the president has brought down the deficit by over $1 trillion. We're aiming to do another $3 trillion with this budget. So all we ask for here is a good faith effort by Congress, especially Republicans in Congress, to work with us to move the country in that direction, which I think would be good for our long-term fiscal sustainability.
All right. Well, there's always an open invitation for someone from the sitting administration to come on to CBS News. Bharat Ramamurti, thank you so much for being that person for us today.
Thank you.
Thank you.